Hello, this is Quang Huynh, Premium Finance Broker of CWF Group and also the author of Keep Calm and Mortgage On. This week, I've been getting a lot of clients who've came to me with this stressful question. Hey Quang, I haven't done my tax yet, but I've been running my business for about 2 to 3 years. Can I still get finance? Yes, you can. It's called low doc. And you'll be surprised how cheap the rate is. Okay, 4.34 to 4.4%. I know, right? Cheap for a low doc, and they can lend up to 80%, up to $1 million on just an accountant's letter. All right. So I know a lot of you probably know for self-employed clients, you probably, I wouldn't say you're not paying your tax, I would say you haven't got your financials ready, right? Or sometimes it's too early to submit your finance to your accountant. For example, financial year was just, a few months ago. You don't want to lodge that when you could lodge that next year May, right? And pay that tax, which could be, $30,000 to $40,000 depending on how much you make. Now, if you are paying a little bit of a premium. So for owner occupiers, you could get about 3.85, but for 4.34 you can get a loan. So what is the advantage of using low doc? Well, low doc is probably a very temporary solution for our self-employed clients. So basically, you'll probably be on this for maybe a year or probably a year until you get your finances or your financials and tax returns done. Then once that's all in good shape, you can just refinance it to your, more competitive banks. But then those banks look at your full set of financials. And also, good thing about low doc, it's really quick and easy. Don't need to collect anything. Basically, you'll probably pop your accountant on the phone with the broker or the bank, and then they'll just ask them to sign a letter to declare a certain amount of income that they think the client has earned or will be earning to qualify for the loan. And 9 out of 10 accountant will just sign it, and then you get the loan in 1 or 2 weeks. So this is just letting people know that there is an option out there, and obviously if you can provide some BAS, which is business activity statements, you can go up to $1.5 million just on BAS plus accountant letter. Obviously the rate wouldn't be your concern here because it's a more of a temporary solution. Your concern is that maybe your off the plan is settling. You need cash out because low doc can do cash out. You need cash out to basically fund a certain expense. Okay, obviously you got to declare it with the bank that it's for a business expense, or it might be to pay a tax bill. You can certainly do that. But most importantly, the reason for low doc is you might have found an off the plan property and you don't have enough deposit to pay for the 10%, but you have existing equity in your existing property, but because of your business and the financials, you can't really draw that money out as quick as possible because banks will say, hey, give me a 2 years financial notice assessment, profit and loss balance sheet. With the low doc option, you can quickly draw out the money, pay for the off the plan. You might also or maybe if you need to settle in 6 weeks, you need to settle, use this option. And then whilst this option is providing you with that property security on a higher rate, and mind you, it's fixed as well, there's some fixed rate options, so it doesn't change. After, say, if you fix it for 2 years, after 2 years, your finances would have, your financials would have been done correctly, and then refinance that and get it on a cheaper rate. But to be honest, 3.85 to 4.34, it's not such a big change in terms of rate wise, and there's no fees involved in this. Not a lot of fees. Well, if you count $350 or $400 application fee, that's not a whole lot of fees to get a low doc loan when they look at nothing at all except a calculator. If you want to borrow $1 million, the calculator plus BAS for $1.5 million. So if that helps you a bit, maybe, it's time to look at these options. And in the meantime, keep calm and mortgage on.